Vikas Halan, Senior Vice President, Corporate Finance Group at Moody's, joins us right now to talk a bit about what's happening in the commodity space. It's been hogging the limelight for many days now, especially ever since the outbreak of coronavirus has happened. There are a whole host of fears, concerns and red flags that we're looking at, especially in the commodity markets. The impact has been very, very substantial, whether it's metals, whether it's crude. Vikas, I just want to start with with oil prices. We've seen oil prices almost enter a bear territory sort of a market, bear territory sort of a situation. Right now, they have climbed back because OPEC and its allies are weighing the output costs to cushion the coronavirus impact. What is your analysis of how oil has been reacting, and how do you see things pan out from here? Is it likely to stabilize, or will it be uncertain for some more time till we have more clarity on what exactly is going to happen with regard to the virus outbreak?
Yeah, hi, thanks for having me. It's very interesting last couple of weeks with respect to oil prices and, starting the year with the backdrop of slowdown in economic growth. And that was already sort of factored in the last OPEC production cuts. So the coronavirus was a bit of a wild card, which reduced the demand a few more million barrels. And then we've got the impact of that not yet very clear, because the last couple of weeks we had Chinese New Year holidays and the economic activity was also slowing down because of that. Now, as people come back from their holidays, and a lot of people are still working from home in China, and therefore, we haven't really seen the impact, being played out fully in terms of the total demand slowdown. So at the moment, OPEC is providing a little bit of support to the oil prices, but it remains to be seen how badly the demand is going to get hurt. And given that the number of cases continues to grow and not yet stabilized, we are yet to see the impact of this on the oil prices. And I would say that before things get better, they might get worse.
Right. But given that OPEC is now saying that, they will be looking at cutting back production. China is, of course, the world's biggest crude oil importer. It's been the main driver of global energy demand growth in the recent years. And now that there will be some production cutback from OPEC and its allies, a host of other countries also mulling over it, do you think prices will recover and stay put, at least in the next couple of days or weeks?
As I said, the impact on demand is not yet clear, and that was muddled by the holiday season in China. So the impact will be more clear in the coming days. And on top of that, we have started seeing decline in air travel towards China. The people are still working from home, so the demand for transportation vehicle is going to come down, and therefore it remains to be seen how steep the OPEC cuts would be. As you said, China is the largest consumer in the region for crude oil and petroleum products. And, crude oil is one part of the picture. The other part of the picture is the petroleum product demand, because China also is one of the largest producers of petroleum products and petrochemicals. With the slowdown in the economic activity, we might see a cascade of impact throughout the value chain on the oil side, and not just crude oil. The rest of the region, we always, thought that there would be, marginal players in terms of the demand growth. China continues to be the largest one. It's unlikely that the slack from China's demand growth could be picked up by anybody else. And Chinese demand growth, as I said, is not yet clear how far that demand growth will slow down. So in terms of future outlook as to whether the oil prices recover, it depends on two factors: how steep the demand decline is, or demand growth slowdown is in China over the next coming few weeks, and how steeply OPEC is going to cut the production.
Right. Just a couple more questions for you. Given that China is now infused a fair bit of stimulus. So the government's quite proactive. They've, gone ahead and to protect that $45 trillion system, they've injected around $173 billion into the economy. So look, keeping that in mind and assuming that the coronavirus is not going to be a long-term continuing threat, is this a buying opportunity? Because what we've also seen across the globe is that gold, which tends to be the safe haven and the hedge, that seems to be tapering off. And it does indicate that some of the money is moving back into China and that people are willing to take on that risk. So what are your thoughts on that?
Look, the stimulus is a financial stimulus, but the economic activity will only, sort of come back to normal when people are not afraid to come out of their houses. So I don't think any amount of money can make them come out of the houses if, there is going to be stimulus. So economic activity picking up is going to be the first sign that this virus outbreak is behind us. I don't think we are there yet. But, just stimulus in itself may not solve this issue. And at the moment, the impact has sort of been limited to China. We haven't seen the impact of this in the region as a whole. We have only seen this in China, maybe a little bit in Hong Kong. But beyond that, we haven't seen that slowdown. But it could happen that if, there is more transmission of the disease from one local to another, there could be similar impacts felt across the region. So stimulus in China, yes, while it stabilizes the market on the financial side, whether that in itself results in economic activity remains to be seen. And I think this is a slightly different problem than having your economic activity because of tightening financial policy. This is more because where people are going to shop, where people are going to eat, where they go and out and spend money. That cannot just change because of financial stimulus.
Metals was also substantially impacted, Vikas. If you could quickly tell us, for traders who are looking at this space very closely and other market participants as well, how should they play this theme or, especially the metals pack at this point?
Look, we are a credit rating agency. We don't provide advice on how people trade. In terms of how we look at metal prices, very much in the same tone as other commodities. China is the largest consumer in the region and has been for quite some time. So any economic activity slowing down in China will have an impact. And as I said, the demand slowdown impact has not yet sort of fully gone through the system because of the last couple of weeks being holiday season, and we are yet to see the full impact of this.
All right, just one more follow-up question from me. You see, I completely understand what you're saying, that you need to assess the demand impact as far as China is concerned. But my point is that I feel like, okay, let's say this virus takes even 6 months to a year to play out, for people to really start coming out again and living their normal lives. So let's keep that as a hypothetical situation here. Then where do you see the outlook for these commodities going? Because obviously the country is not going to permanently shut down. It may go through a slowdown period. But if you look at the way oil has just fallen, it's not been this low in a year. So it's definitely priced all that in. So what we're trying to really come to is, what do you think healthy levels for these commodities would be, that even China shows some kind of rebound within the next 6 months? Or do you see this as a range-bound kind of price where they're going to linger for a while?
Look, at the moment, you're right. Clearly, the country is not going to shut down, and this is going to go behind us at some point, and it remains to be seen how long this plays out. All I'm saying is we have not reached the peak of this yet. It seems like the numbers keep on growing every day. So once we reach the peak of this infection, when the number starts to come down, then we can take a view as to how badly the economy has been hit. The other issue here is with respect to China being a net importer. So the impact of that China is going to feel in its economic activity will be felt across whoever is exporting to China. So you are going to see the contagion from any sort of slowdown in economic activity across commodities, across different exporters. And from once we reach the peak of this and this goes behind us, of course, then it will be determined by the fundamental factors as to how the economic activity recovers. China might, continue to stimulate the economy, and that can be positive at that point in time. But those are things that are not yet certain, and there are a lot of variables between now and then. But overall, as I said, when we started this year, the backdrop was that the global economic activity was slowing down. This year, global economic growth was cut down by multiple agencies, and that was already somewhat factored in to our outlooks. And on top of that, this virus outbreak has made things from bad to worse in a way. And once this goes away, whether we are going to go back to good all of a sudden, I don't think so. We probably have to, at least look at 2020 as a year where we may not see a recovery that is very strong.
Vikas, okay, thank you so much for joining us and talking to us in detail about what the impact is likely to be and what one should be looking at and how to analyze this commodity space at this juncture. Many thanks for joining us once again.